Good morning, everybody. Thanks very much for joining us. Welcome to this GARBE investment briefing. And today we're going to be looking at the French market and particularly the outlook for 2023. Super panel here. So really interesting to get their views, but also your views as well. So if you've got any questions that you want to bring, please put those in the chat or the Q&A, which you'll find on the side of your screen, and I'll make sure we pick those up. For those who don't know me, my name is Richard Betts. I'm the publisher and head of content here at Real Asset Media, and we run around 60 or 70 of these sessions, sharing knowledge and market insight, and trying, I suppose, to be able to shine a light on both sectors, but also some of the key topics and key regions and countries. What we're going to do first of all today is just have some presentations, just to be able to share, I suppose, some of the key data with you, and then we'll open that out into general discussion. But we're going to start first of all with Riccardo Marcelli Fabiano from Oxford Economics. So welcome to you, Riccardo. And Riccardo's just going to, I suppose, first of all, just share some of the macro outlook. So over to you, Riccardo.
Thank you very much, Richard. So yeah, what we'll be talking about today is a bit of Eurozone and French outlook for the very short term and a bit longer ahead. Let me start off by saying that we'll be talking about some news, some positive and unexpected news. Why? Because the Eurozone is proving surprisingly resilient. This is mainly due to higher than average temperatures, which have had a host of good effects on the economy. So first of all, I mean, of course, a higher than average temperatures have helped us reduce our gas consumption. So we'll have gas storage levels that are way higher than usual. So this is very good news. And by the virtue of classic laws of demand and supply, we have dropping energy prices. And this is something that you can easily see in the left-hand side chart. So we have this red line, which is for 2022, which is very close to a historical maximum. And even if you look at the tiny bit on the left, like the tiny green line, we see that we are faring very well on that. So the combination of full gas storage levels and dropping energy prices have reduced a lot the threat of gas rationing, which would be very detrimental to the economy. So these positive surprises have also spilled over into the real economy. So we are seeing a string of positive data surprises, as we can see on the right. So this is all good news, but at the same time, we are not that optimistic as far as a bit the more medium term is concerned. Why so? Because we have a variety of factors kicking in, like, for example, tightened monetary policy, which impacts with a lag, so especially via investment, but also via consumer spending, because if we have higher interest rates, then interest rate payments will go up. And also we have had a very strong and resilient labour market, which is probably likely to soften a bit as growth slows down. So as we can see on the right, we don't expect a strong 2023 anyway, even if we are again surprised by the resilience of the data. Why? Because of all of these factors that I just mentioned, but also on top of it, you have the fact that the catch-up effect from COVID has been dying out already, and it will be very weak next year. So I mean, of course, we do have some country specific variation, but in general, in the Eurozone and in most countries, we see a sluggish 2023, and we do not expect any big surprise from growth. Of course, as it was mentioned, we do have some cross-country variation. France, in particular, will be doing a bit better, and we'll look into that more in detail further ahead in the presentation. But let's move on now to the hot topic of the moment, inflation. So we're seeing slowing inflation, falling inflation rates, and we expect that we are past the peak. Can that happen after so many surprises of growth? Inflation going up faster than expected. Well, for a starter, we see inflation expectations in surveys going down, both for firms and consumers, and if they're not going down, at least we are stabilizing. So this makes us believe that an upward wage price spiral is unlikely, especially when we are seeing, as we can see on the right-hand side, falling energy prices. So again, this goes back to what I was mentioning at the beginning. We have very high gas storage levels. We have reduced demand for gas, both by households and firms. And so we have falling energy prices. And as we had an inflationary effect of soaring energy prices some time ago, everybody knows that now, we'll also have a disinflationary effect of dropping energy prices. Does that mean that we see inflation plunge very quickly to the 2% target? No, unfortunately not. Why? Because if we look at core inflation, which is the component of inflation that strips out energy and food, it's very sticky, and it tends to lag a lot energy and food development. So we have that component of inflation which will prop up headline inflation, but at the same time we'll see a sustained easing in inflation over 2023, and we'll slowly get back to target. But at the same time, this is not going to convince the ECB to stop their interest rate hiking cycle, especially on the back of these positive growth surprises, so a moderate recession to be expected in the Eurozone in general. So as we can see on the right-hand side, I'm referring to the red lines, we'll see policy rates going up again in the very short term. So we see 2 more 50 basis points hikes in February and March, and after that, the ECB is likely to pause its hiking cycle, and after around 2024, we'll see policy rates falling again. Of course, that will have an impact on government bond yields, and so we see government bond yields rising in the future, as they have already, and that will spill over to other interest rates in the economy, such as household mortgage interest rates or interest rates for firms. Okay, now we can move on to France. As I was mentioning before, France is a bit in a better position than other countries, and this is mainly due to the fact that it saw the lowest inflation rate in 2022 in the whole Eurozone. This is mainly due to the government to very swift and drastic government intervention, which put a cap on energy prices, and that limited the spillover onto other categories. So this is very good for the economy, because this shielded households' purchasing power, and so their ability to consume and to prop up growth. But we do also have some less positive news on that side, in that inflation in France is probably going to rise a bit further, unlike it has unlike having been past the peak already, as in the rest of the Eurozone. And also due to the fact that energy inflation was so much lower than in the rest of the Eurozone, we'll also have a lower disinflationary effect of falling energy prices. So although France enjoyed a lower inflation rate in 2022, the easing in inflation will be more gradual, and we are not past the peak yet. But on the growth side, what I've been talking about the Eurozone basically applies to France too in general. So we are seeing surveys, for example, here I put the PMIs, but this is generally true. They have bottomed out and they're starting to improve, for example, manufacturing PMI. And so this is also positive news for a milder, and bodes well for a milder recession this winter. We still expect 2 back-to-back contractions of the winter in France, but again, we should be shallower than elsewhere in the Eurozone. Let me just sum up what I've been talking you through now with a few key messages. So we have some positive surprises from growth at the Eurozone level, and this is mainly thanks to seasonal high temperatures. Inflation has been rising a lot over the past year and months, but we are likely past the peak in the Eurozone, and this will continue. The fall will continue mainly thanks to dropping energy prices, but also lower demand. On the negative side of it, inflation remains high, so monetary policy will continue to tighten, and this will weigh on growth. And on France, we see lower than average inflation, which is not past the peak and will fall only gradually, but will still be a plus side of the French economy, which will be a bit more resilient than elsewhere. So that be from my side. Richard, I don't know if you want to take it on from here.
Great, really interesting, Ricardo, as well to see that. I think, and we'll obviously pick up some of those points in the Q&A. If you've got questions for Ricardo, do please put those in. I mean, I think it's really interesting that that piece around the discussion on the economics and the fact that France had less of an inflationary effect, and that's going to be positive for growth. I think that's a really interesting thing to pick up on in the discussion. We're going to now pick up a little bit more from Tobias Gassner, who's head of research there at GARBE. Tobias, so let's just pick up, I suppose, the European logistics market, because I think people would be interested to see that in terms of how how we're looking at that market, and then we'll also go to Michael to drill down a little bit more in detail into the French market. But let's start with you, Tobias.
Yeah, thank you very much, Richard. I'm very thrilled to be part of this panel and talk about the European logistics market, because it's like Ricardo pointed out, quite an it was a year last year which was kind of a game changer for the investment market. So I'm trying to get to the next slide. That doesn't work. Sorry for that. Maybe you'll have to do it manually. Before getting to the specifics of the European market on the logistics real estate side, a few comments about GARBE for those attending who are not familiar with GARBE. We are a logistics real estate platform. We are covering not only at the development side, but also are investing quite a lot into logistics assets all over Europe. We're coming from the German market, but in the last 3 to 4 years, we set foot on the most important major markets in all of Europe, covering nearly every country in Europe. And for instance, we're going to the specifics to the French market. Like I said, we are a real estate platform. We have the whole life cycles, and so we are covering the real life cycle of the assets as well. But now looking to the markets, as we are all aware, real estate cycles and economic cycles are nothing new, and it is rather common for the last decades. It has ups and downs in GDP and other aspects as well. But the last crisis, it comes on top of the not yet over Corona pandemic. And it was a game changer in terms of that we have to face costs in financing based, of course, on the interest rates of the European Central Bank. Ricardo told us about it, which distorted the investment market quite a lot. For the other aspects, and we are trying to look into it within the following slides, some basic KPIs were changing quite a lot. The inflation led to higher construction costs, higher financing costs, all coming down or back to the interest rates. We have, of course, the risks that the economic situation in general will change, and on the labor market. But as we already heard, it wasn't so bad as we feared it would be during the spike of the energy prices, for example, in August last year. But it's not going back to normal again, because what we see here is a real drastic change in the real estate economic situation. Here shown in the RECOX values. The RECOX is a synthetic indicator showing the real estate economic situation. Here shown for the most important European markets. And as you can see, since the financial crisis, it all went rather up for the German market especially. So the conditions based on very low financing costs, again, based on very low interest rates, were really good. So the run on real estate assets, on the real estate markets as an attractive asset class, lasted nearly a decade, more or less a decade. But as you can see, beginning with especially with the Russian aggression against Ukraine and the changes connected within, the situation dropped quite significant for the German market, but for the other markets as well. But it's still way better than it was, for example, during the financial crisis. So, but based on these changes, we are now looking what happened to the markets. We are not able to look into every market and every KPI. At this point, I would like to invite everyone to participate in the upcoming GARBE pyramid we are having next week, where we will show the changes happened on, especially for the rents and for the interest rates, for the yields. But before that, the demand side of logistics real estate is very good still. As you can see, we only have figures for the third quarter available for last year, but and so the last quarter is missing, but we can still see we're not very far away from the 5-year average in demand. So even if the last quarter will be somewhat lower than normally, and every science is showing that it will be, we are very having a really based on the demand side, having a very good year. And as you can see here, when we drill down on a quarterly basis, it's decreasing the demand, but it's not because lacking demand, but lacking available space. And we can see it here on this slide. When you look to the green line, it's a vacancy all over Europe, and we are having about 3% of only vacancy space. This is an historical low, and in many markets, it's even lower. Michael will show it as a situation in France later on. So what is going to happen when everyone still wants to rent space, but the availability is low, and looking to the construction costs, the financing costs, the supply side will decrease in the upcoming years. Not so much space as in the last years will come new to the market. The rent prices will go down. We can already see it for the last few years that it is increasing, but the pace, it won't stop in our opinion, but it will increase for the upcoming years later on. So that is the situation for the rent side, for the rental values. Going to the investment market. As I said, real estate and especially logistics in the last years were very sought after. Here we can see it for the investment volume for all of Europe. Again, 2022, we don't have any last quarter for the fourth quarter, not the dates or the values were not published yet, but we see an increase in the share to 24%. So nearly a quarter of the investment volume is channeled into the logistics markets. So that was a reason that the prices went up quite a lot in the last few years. If you look to the transaction volume on the map, you can see whether the most sought after markets are shown in all of Europe, and it's no wonder that bigger markets like UK and the very market with a long history, as well as Benelux, are still the hot the hottest markets, and you see a slight decrease in the investment volume as well. Again, here we lack the last quarter as the data, but still you can see we are above the average of the last years, and even above the third quarter when we compare to the volume of 2021. So even if the last quarter is somewhat slower, we still had a very good transaction volume and many with a fundamental very good situation. But as the prices did change quite a lot, many investors were stalling, and we're talking about later on in the discussion what the pricing situation will be. We see it in the last presentation, and we see already a slight change in trends. For example, that many institutional investors are not investing so much in the Central and Eastern European countries anymore because they fear the vicinity of to the war, of course. We see some markets where we didn't see any change at all. For example, you can see it on the map on the right that its transaction is more or less the same in the UK markets, Benelux. But we see, for example, a shift to France as well, especially when it comes to the Ile-de-France area around Orléans, for example. And in some markets, we see a decreasing trend as well. For example, Switzerland was nearly empty when it comes to transaction, and in the northern parts of Italy as well. And of course, and that's the main thing that changed last year when it comes to the compression. It was a effect for years that every year we had to face with continuing compression of the yields. This changed quite a lot. And so the investor side, the buyer side, and the seller side will have to find a new pricing volume. So everyone is more or less in a wait-and-see attitude, where they want to pick up investment transaction activity again, but everyone is waiting more or less until for example, they have a safe situation when it comes to the development of the interest rates. And we already heard that this is a hike cycle will continue somewhat by the European Central Bank, but when February or March is over and the new interest rates are known and everyone has adapted somewhat to it, we expect that the pace of transaction volume, the interest will pick up pace again, especially in the beginning for equity-oriented players starting in the summer, and later on when maybe, and we saw it in the first deck, interest rates can be decreasing again, or we see decreasing interest rates beginning in 2024, or maybe somewhat later, or the more debt-oriented player will be in the game again as well. So, but just a few last slides, and then I hand over to Michael. We do not see only shadows, but we see for the next years also light on the horizon, because when it comes to the global situation, for example, we see that that many participants in the markets see many opportunities for Europe as a whole, based especially that China as a market player has been not so or the dependency on the market will be reduced, having a re- and nearshoring trend somewhat. It's combined with a discussion about, of course, with the higher energy pricing. It's come somewhat to a halt, but in the upcoming year we see opportunities for this picking up pace again. And for example, if you here look at what is happening right now, this is all what we see here is all the battery plants which will be installed up to 2030. And many of them, for example, are in Germany and other major economies. So we cannot produce batteries on our own, but later on we will be able. So the industry will have much more capacity and the story, and therefore the need for logistics space as well. And this is the same applies to the chip industry, for example, the raw materials dependency, not only with the big fund in Sweden a few weeks ago, but before that, the European Union and the individual countries did already set the tone for reducing the dependencies as well. So in the upcoming years, we see Europe as a group of countries where the industrial side and the logistics sides will have a very high future demand as well. Now I would like to hand over to Michael for the last part, so delving into the details and specifics for the French market.
Yeah, really interesting, Tobias, and it's going to be great to drill down into that that French market, Michael. Some interesting points there, Tobias, I think that came up there, and we'll pick up especially around the nearshoring. And I think, and I would as well also say that if anybody's interested in the logistics side, do look at the GARBE pyramid research, because that's a really fascinating one to look out for. So, Michael, you're great to drill down a little bit just in terms of the French market, and then we'll pick that up in the discussion.
Yeah, okay. Thank you for this. So I'm going to be quick with the KPIs. So on the investment market, 2022 was a really performing year. We note a slight decrease compared to last year, but 2021 needs to be appreciated and considered that it has been a really big success. What we note is the Q4, as we got the figures for the Q4 in France, has decreased compared to other Q4. Every year is the race between competitors, investors trying to secure a lot of capital into the logistics market. But this year or last year, it has decreased, and I think the first quarter of 2023 is going to be the same. What we notice that the logistics segment market shares is 20%, which represents a huge success. I mean, in terms of commercial real estate. So it has become an asset class re-established. And when we add up to the logistics segment, the light industrial, we close 25%. So in total, let's focus on the 25%, because I think light industrial and logistics are quite close. What we see on the French market is the French investors only represent 25% of the market share. So I believe that many foreign investors are already seduced by the French market, and I think they come to France because they're looking for rent reversion, because compared to other established countries into logistics, when we look at rental values, we see that we still have some room to progress. We're gonna drill down to rent afterwards, but it's one of the main reasons why investors want to come in France, and obviously there is a lack of supply as well. So if we go to the take up last year, as we get the Q for the full year, we saw a little decrease compared to 2021, but 2021 was really a successful year as well. And what I would like to bring to your attention is not because the take-up has decreased that there is no interest from users to fill in new premises. It's just because that we don't have any more space to offer. And this is problematic. So we way beyond, above the 10 years average in terms of take-up. And we would love to see it going up again this year, but due to shortage of supply, I don't think we're gonna notice this in a year from now. What we can report as well is the XXL transaction has decreased due to lack of land availabilities, and this is the large platform are difficult to build up on a speculative approach as well, because it's the massive investments, massive capitals to inject from a development company. It doesn't make sense, to take that much risk, especially in this kind of market right now. And I think what we can say, and we're gonna see it on another map, on another slide, is that Lyon and Marseille are really poor in terms of supply, so that's why the take-up is low as well. No, you can see it on this slide, and Lyon and Marseille just totaling for the two regions only, let's say for an example, 3 warehouses available. So this is nothing, and we note that 21 and 2022 year was at low records in terms of immediate supply, even though for grade A or grade B buildings, and the grade B buildings, even though they're not filling users' expectation at some point, they're gonna be fully occupied soon, because the take-up is increasing. So demand is here, and it is part of our strategy as well to reshape grade B buildings into grade A if we can, because we feel that the rent's gonna go higher everywhere, and for as many asset classes as we have in the market. So this is commercial success in terms of immediate supply is really low. So we report good fundamentals for the French market. And after discussing about supply, we can see the vacancy rates. So it's almost nothing for Lyon. Paris is really minor as well. So we don't have enough supply to propose to users to renovate the park, or to regenerate the stock, the current stock. The only region where we see fluidity is in the Hauts-de-France, let's say close to Lille. This market is interesting for developments. It concentrates a large part of speculative development as well, and we strongly believe in this region, even though it was not the case like 10 to 5 years ago, because the vacancy rates was a break to go into this region. The prime rent since the 2000 it has increased drastically, and even more since 2020, 2021, and it's we believe that the market fundamentals is not ready to push downwards the rent, the prime rent, and even though all the rent, because due to the lack of supply. And I think asset managers as well as development companies don't have the choice to look for higher rents anyway, because otherwise the equation, the mathematics don't work. When you facing higher construction costs, higher financing rates, there is no choice except pushing the rent further. Otherwise, it doesn't make sense. And I think for all the investors who were like active on the market, like the last 2 to 3 years, when they see valuation decreasing, for them, it's the only option to rebalance the loss, the experience. In terms of prime yield, you see it on the graph that from the 2000s, it has been decreasing a lot, maybe except during the financial crisis in 2007. But then everything has changed recently since the Ukraine political tensions. And I think logistics has been repriced really hard compared to other asset classes. So I think it creates now really good opportunity to come back on the market and to enjoy this decompression in terms of yield. And we believe at some point that investors going to go back on the market and mid this year, and the competition is going to lower the yield a little bit more. So I think this is a good opportunity, good timing to go back or to enter the market, because the rent's gonna go high and the yield's gonna stabilize or lower a little bit further. So we're confident about this. So yeah, so I try to make it quick, maybe opening for the discussions.
Great, really interesting. Thanks for that, Michael. Fascinating to see some of that data there, and extraordinary to see that slide, I think, around Lyon, where it was right at the bottom. almost nothing there at all in terms of vacant space. Thanks very much for the questions that are starting to come into the Q&A. Do keep those coming, and I'll make sure we pick up on those. Lots to drill down into this. Ricardo, I just wanted to pick up with you just something which is, you mentioned there about France being different in terms of its, I suppose, the interest rates there and the inflation rates there. What was the change? And you see that being positive for growth. Do you see that in fact, France has maybe done well here in comparison to some of the other European countries?
Yeah, sure. Very, very interesting question. So yeah, of course, in economic data, we do have a lot of volatility. So you have to see through a bit the swings that happen quarter to quarter. But in general, real incomes have held up better than in the rest of the Eurozone. So of course, this is because by the very virtue of having lower inflation, so things cost less. So my purchasing power as a French consumer will be more shielded if prices do not go up as fast as they do in other countries. So my purchasing power is higher, so I can spend more in real terms, even though maybe in nominal terms. So like not in euro terms, but in real terms, in terms of good, in terms of services, I can spend more, and that of course is supporting growth. And as I was saying, sort of mentioning during the presentation, this is probably going to have an impact also on 2023. Of course, we do have quite a lot of variety across countries. For example, Spain is also holding up well over winter. But in general, France is better positioned, especially due to this channel of purchasing power of consumers that can afford to spend more, and so to boost demand.
Okay, that's interesting. I'll come back a little bit as well on the interest rate cycle, which I think is interesting for everybody. But Tobias, I just wanted to pick up with you. When you're looking at France in terms of, I suppose, the other European markets that you're looking at, do you see similar types of opportunities there? Or do you think there's something particularly special at the moment about the opportunities here in France?
Well, last year we launched a pan-European portfolio or investment opportunity fund, and we did it because we see in many different countries individual strengths when combined together is a very strong portfolio. For example, we have a very stable market, and I would count France to it as well. But we have, since, and that is what Michael said, we have markets where there are new opportunities because it's a new space is being built, because the other sub-markets are totally rent out and there's no vacancy. So the tenants as well as the investors have to think about new sub-markets. They need to, and for the investors especially, to different kind of investment opportunities in different countries, not focusing on one market, but the strengths combined. For example, there's the stability in one market or some sub-market combined with the performance kicking availability of other markets. So here I think, and therefore we're set foot in France, I think, and we saw it in the record slide, that this is one of the major and well-developed real estate market. France is playing a very major role, and therefore there are many opportunities. We as GARBE and many others investors as well, of course, would like to pick up on.
And Michael, just coming, thanks very much for that, Tobias. And Michael, I wanted to pick up a little bit on the reshaping sort of B assets to A assets in terms of sustainability. What's the market there? I mean, what's the opportunity there, if you like? How much of the assets would you kind of classify as B? And I suppose, where's the opportunity there?
I think there are a lot of opportunities in the grade B segment because, as mentioned, the warehouses find tenants everywhere and in every kind of conditions because due to the lack of quality stock and quality product available in the market, and especially right now because a lot of the transactions have been stopped and there is no launchings on a speculative basis. So at some point, brand new products are gonna be lower. I mean, in a lower amount compared to the stocks and compared to previous years. So we believe that as we get the experience internally, we could help investors to secure new grade B building. Try to, even though with a short-term lease, so facing a break event in the near term, to reshape the building and generate and benefit from a rental reversion. So this would be great for the distribution or for the yield profile or yield perspective, because then if you get into the market with the yields low in term, you're gonna capture a significant margin. And we believe that in France we suffer maybe from a lack of new product. Large part of the stock is on a grade B basis, but still with good fundamentals for some of them, for major part of them. So we believe that we can reshape them, refurbish them, and to offer them to the user at attractive rent. I mean, for both the users, but also for the investors.
I've got a question that came in, Michael, as well, that I'll just pick up with you, yep. Which is, what's the impact of the Loi Climat on older warehouses? So it'd be interesting just to get your sense of that, I suppose, in terms of the regulatory side, what impact that may be having on the market, especially, you know, in the light of this sort of opportunity for grade B to grade A and improving resilience and sustainability.
So now we
view on that.
Yeah, so now we see a lot of investors coming in the market with these requirements. It was not the case like 10 years ago when we were proposing, we were buying logistics warehouse. And I think it's a really great opportunity to fit into these requirements and buying, securing grade B assets, because basically they don't stick to the reality the investors are looking for right now. So if we propose a capex program that benefit the building and fit in the investor strategy to get to propose a better understanding of the assets, lower consumptions, and maybe but it's technical point maybe to add up some solar panels on top of the roof. That would be really great for the planet, for the investors, and for the users as well. So we have a big focus on this, as many investors right now, or competitors everywhere, is driven by this strategy. But I think it's ideal to focus on this kind of assets, and will fit in many investor strategy in terms of environmental policy.
Okay, great. And Tobias, that's obviously going to be informing as well, you know, across Europe, the sort of activities there in terms of GARBE. Do you see that accelerating in terms of that sustainability side over 2023?
Yes, of course. It's one of the most important topics, and like Michael already said, for us, it's a great strategy to just it's called an ESG to core strategy, for example, because you just have to reflect. I don't know the figures for France, but in Germany, the stock of the logistics real estate is more or less 96% older stock coming from before the year 2000. So we have to focus on this. So if we want to have a real climate impact, we have to focus on the older stock, and they have really good opportunities aligned with them. For example, they have much better strategic locations than the new properties. They tend to be located farther away from the consumers or the producers. And if you focus on the existing stock, you have the availability to decrease the eco balance. You have to increase. You have the opportunities to, when you like Michael pointed out, that you when you reshape the building, not only from the technological side, but for the tenant suitability, you can achieve higher rents with better. They stick to the locations, so it's the cash flow is even higher and more secured. So from all of the perspectives, it all plays out pretty well. And the investors, they are demanding it. They are demanding a more ESG-focused strategy. So this will not decline. And in our opinion, will even increase intensity and pace.
And maybe we can add that it's a specific time to deploy this strategy, because pricing are reducing for this asset class, as many investors are focused on brand new buildings, and they're gonna suffer for repricing even higher than the other great A buildings. So I think it's really interesting to get this focus.
Okay, great. Thanks, Michael. Ricardo, I just wanted to pick up with you that sort of view on the interest rate cycle. So what would be interesting to know is, you know, has your view changed a little bit on that? Is that interest rate cycle improved in terms of, I guess, where you might have seen it if we were having this discussion 12 months ago, for example? You know, so post the Ukraine-Russia war, has that changed? Do you see that as a sort of better outcome in terms of the cap on the rise in interest rates in a way?
Okay, so actually I would say it's probably the other way around, because the inflation shock following the Russia-Ukraine war. Of course, we know that energy prices started soaring way before the actual outbreak of the war. But it was the shock of soaring energy prices on inflation that prompted central banks in Europe, and especially the European Central Bank, to react in such an hawkish way. I mean, in order to maintain credibility. So we were actually, envisaging a lower path for interest rate before the war, and now we have most recently, after a hawkish messaging in December, raised a bit our expectations. But again, we are already past the peaking inflation, most likely. it's very difficult to see things reverting from the path that we've been following over the last 2 months. So we don't think that a European Central Bank will have any particular reason to keep on rising interest rates. Again, we do the only thing that will stick to two more rate hikes in February and March, but after that rates should plateau and then start coming down. And also the impact on the real economy, especially by investment channel, should sort of fade over 2024.
Okay, great. A lot of interest here, and thanks very much for that, Ricardo. A lot of interest here in terms of rental growth. So thanks for the questions coming in on that. And Michael, I suppose particularly looking at France, you know, we've seen the average. The averages, but you mentioned that it's, you know, it's very different depending on the different parts of France. So I suppose what's your expectation in terms of rental rise? And I guess looking at those markets, obviously we're going to see a difference between Lille and Lyon, for example, where you've got take up in, you know, in a different position.
Sorry for my voice. I'm back. We see. Historically, investors were focused on the backbone, the French backbone, going from Lille to Marseille, let's say, and that's why we don't have any more availability in the south due to the territory as well. It's difficult to build up space. So as I mentioned, these undersupplied markets are gonna report huge rent reversion from the asset management perspective. Years ago now, you could have an empty assets in Lyon, and right after 3 years time from now, it was filled up and at a crazy rent compared to the initial business plan, because there is a lack of opportunity, a lack of supply, and a big demand, big take-up. We see that in the north of France, the rent's gonna be a little bit reduced compared to Paris. So Paris region is, I think, where we will see the higher rents. The Lille market is gonna start to recover as well, because the prime yield is gonna be 50 plus now euro per square meters, and which is really attractive. And I think 4 years from now, we were talking about 40 euros. So it's a huge increase. And I think when you're outside the backbone, obviously you're gonna pay the land cheaper, so you can afford a lower rent. So for the development companies, it makes sense to lower a little bit the rent, and for users to move out from the backbone and to focus on other territories. And I think that for the past 10 years, we have seen yield compressions, and then the rent was not the main driver to make a profitable business. I mean, the yields were decreasing, so every trimester, every quarter, you could make money because the yield decreased. So the rent was not a big focus. Now everything has changed because the yields are going up. So the rent is really key now. So to answer your question, we see differences between the backbone and other markets, but I think at some point they're all gonna follow the same trend, and the rental reversion is gonna be everywhere.
Okay, great. There's less than 10 minutes of the session left, so I'm going to go to some kind of quick fire kind of ones. But if you've got any questions, do please put those in, and I'll include those in the quick fire questions as well. Tobias, it would be interesting to get your sense, I suppose, just briefly on that idea of nearshoring, friendshoring. Do you see the Mediterranean in general being kind of more important in terms of supply chains and those kinds of things? I mean, it's interesting just to see discussions around that in Italy, for example, and just interested to see whether that might also be a bonus for France in that sense.
Yes, really nearshoring, the discussion around was of course focused on the time when the COVID pandemic struck hardest, and we had distortion in the supply chains, and there's still it's getting better, but it's still being discussed. It was slightly subdued because of when the energy crisis. It's a rather big part in the production, of course. Again, with the cost, together with the cost of labor force, and Europe is well, it's not Asia. They have a higher labor force costs and energy costs. So it was subdued when it all came down to the energy costs, but. Basically, what is happening right now? Everyone was shocked about construction plants coming to a full stop because they couldn't produce anymore. So they were used to just produce in time, and now they're talking about just in case production, so stockpiling for the production side as for the retailing side, and also somewhat minor than a few months back. But I still think what we saw together with is that China as a partner in trade is not so reliant anymore as we were used to be in the last decade. So it's why the companies are having this China +1 strategy, and this +1 can also take place in Europe. And yes, I think the Mediterranean as well as the Central or the CE markets are here in favor because of the lower labor costs, and France, for example, when it comes to energy prices, with lower energy costs. So yes, I think there are chances here in those markets you mentioned, and especially in France as well.
Okay, good. And Ricardo, it would be just interesting to get your sense of, I suppose, how you see growth in France in comparison to the other, the main European competitors. Do you see that as an opportunity? And particularly as well, do you see more kind of focus on some of the secondary cities, potentially regional cities? Is there an opportunity there? I suppose, what are you seeing?
Okay, in terms of the whole country, I would say yes. Like I was probably mentioning that before the presentation, but we see, at least talking about 2023, we see stronger growth in France when in the Eurozone as a whole, and in particularly when compared to Germany. When compared to Spain and Italy, there are some sort of country-specific dynamics. So growth could be stronger, at least in 2023, but long-term dynamics should not be as strong as in France. In terms of the city, of course, it depends a lot on in terms of the metropolitan areas and regions in France. This is not my main focus, but of course it depends a lot on the sector-specific structure of a region. So I would imagine that more industry-focused regions will perform better in 2024 when we have industry in general recover, whereas we should have in the shorter term services oriented cities like areas like, I don't know, Paris, I imagine, hold up better. But this is a bit specific. It depends a lot on, of course, the sector composition of the regional economy.
Yeah, and interesting to see how that dovetails with what you were talking about before in terms of the growth side coming through in terms of industries. Michael, quick questions come in. Is there a secondary backbone developing in France because of the lack of availabilities in primary? So interesting, is there more of a focus because there's very limited vacancy in primary? Does that mean that there's more of a focus on, secondary locations developing, or is that still more difficult?
Yeah, I mean, the major part of the investment on the take-up is made of the backbone, but new territories are explored by the investors. We saw them going into these regions 5 years ago. They were not scared anymore because the take-up is strong and they anticipate the lack of supply. So what we can say that on the west side of France, from Nantes to let's say Bordeaux, historically they did not have a lot of land available for logistics, but now they try to, even though if it's difficult and the process is really long in France to secure new lands, we see the offers coming in. and yeah, it's kind of a new backbone, another with another shape, I would say, but also closer to the border, with the close to Germany border, we can manage to attract some users from Germany to fill up the space in France, and benefiting from a lower rent. So it makes sense for them to reshift a little bit the supply chain and contract directly in France. So yeah, the west side of France is particularly attractive right now, and yeah, and the other borders like close to Germany.
Yeah, it's interesting to hear about that potential there for German businesses to relocate over the border into France. Very interesting. We've only got a minute left, so I just wanted to get a quick sense from everybody, given that we're looking at the outlook for 2023. What's your sense of it? Are you positive? Are you sort of on the fence? Are you negative? How are you feeling about it? And for those who are able, where do you see the biggest opportunity, I guess? Ricardo, let's start with you. Are you positive, negative, glass half full, glass half empty? What's your sense of 2023?
Yeah, I would say it's a bit of a mixed bag. Again, we are starting 2023 on a good footing, so growth has been more resilient than we'd expected, but we have more forces playing against solid growth further ahead in the year. So I think, generally speaking, in terms of growth, not just for France, but also in general for the Eurozone, we have sort of a slowdown further into the year. And so that shouldn't be a year full of opportunity. I'm rather more optimistic about 2024, because we are seeing already a good response from industry in terms of adaptation to higher energy prices now. So by 2024, the impact of the war, if it's still going on, of course we cannot really tell now, but even if we still had a dire gas situation over next winter, we should have adapted better. So I'm more optimistic about 2024, and see more opportunities there rather than in this year.
Okay, good optimism about 2024. Thanks very much for that, Ricardo. Tobias, just coming to you, what's your sense of that? And interesting also to get your view on the life sciences side as well, because I know that's a topic that we've looked at. Is that something that you'll also be exploring in France here as well?
Well, things life sciences and every industry connected to this is getting more importance as well. For example, if you look at the supply for pharmaceutical or the connected industry, we see a lack in Europe. And like I said earlier, Europe is eager to reduce its dependencies. So we have to build up again our life science sectors. Everything's connected to it. So yes, I think this will pick up pace also, like the industrial or in specifics, logistical demand.
Great, thanks, Tobias. And last word to you, Michael, given that we're looking at France and you're the MD of France there for GARBE. What are you seeing as the, specifically, I guess, the opportunities? And you can cut that down into short term, but also longer term, because obviously what we've learned from today is that there's a lot of changes we're likely to see in terms of the economics and in terms of the market. I
think for the first 2 quarters of the year, everybody is gonna keep looking at each other. I mean, in terms of investors, so it's gonna be still a wait and see situation due to the gap in terms of pricing between sellers and buyers. And then I think good fundamentals gonna take it over, and then investors they're gonna go back on the market. And I think I'm more optimistic for the full year of 2024 than the full year 2023. But yeah. I mean, it's an established asset class now. Every investors need to buy into logistics. It has demonstrated the resilience since the COVID. It is no way that an economy can develop without logistics or industrial sector. And it represents in France 10% of the GDP and total 2 million of employees. So of course, okay, it's a wait and see situation. We need to be seated and calm a little bit. And maybe one word I would like to address is that we need to be creative as well. So if when you know your local market, you know the main actors, you need to find a way out because a way in or to get back in a transaction, because it's not easy. Every month we see some repricing, so it's difficult to manage a tender process, or when you see the price shifting a little bit. So we need to be creative. We need to know what the seller expectations are, development company is waiting for, and sit together. But it's for the benefit of all of us anyway at some point. So it has to restart, and there is good dynamics about it. So I'm pretty confident.
Yeah, I think it's really interesting. Lots of comments also that, actually those people who know the market and real estate specialists, it's their time in a way, because a lot of the financial players are sort of out of the market at the moment. So really interesting to see that. Thanks very much, Tobias, Ricardo, and Michael. Thank you to everybody for joining us. Really interesting to get your questions as well. You'll be able to download the presentations. I'll send a note round to everybody as soon as they're posted so that you can download those. Thanks, everybody. Really looking forward to the next sessions that we'll be running on these. For those who are going to be at MIPIM, we'll be there running sessions on ESG, a topic today, as well as logistics. So look forward to seeing you there. Thanks very much to everybody. And if you're watching on this on demand, thanks very much for watching. Thank you, everybody.
Thank you.